3 years ago, no one wanted to touch nuclear power. Today, Microsoft is restarting 3 Mile Island, Amazon is buying nuclear-powered data centers, and the entire utility industry is racing to build new reactors. There is one ETF built specifically for this moment. This is NUKZ, the Range Nuclear Renaissance Index ETF. It launched in January 2024, and unlike older nuclear funds that only hold uranium miners, NUKZ holds the full nuclear ecosystem in a single ticker: utilities, reactor builders, fuel companies, and small modular reactor startups. The fund now manages around $850 million in assets. Net inflows in the past 12 months were roughly $670 million, meaning AUM grew nearly 75% in a single year. That is one of the fastest growth rates in the entire energy ETF category. NUKZ holds about 53 securities. The biggest position is Cameco, the Canadian uranium giant, at nearly 10%. Number 2 is GE Vernova, the spun-off nuclear and power equipment business from General Electric. After that, you get Endesa, Talen Energy, Constellation Energy, and Terra Innovatum, a small modular reactor company. Sector weights tell the story: 46% industrials, 36% utilities, 13% energy, and a small slice of materials and tech. This is not a uranium fund. It is a nuclear power infrastructure fund. But here is what they don't tell you. The expense ratio is 0.85%. That is high, even by thematic ETF standards. URNM, the pure uranium miner ETF, charges around 75 basis points. NUKZ asks you to pay extra for the breadth, the small-cap reactor exposure, and the active index curation that catches new SMR companies before they go mainstream. So why is money pouring in despite the fee? One reason: AI data centers. The hyperscalers, Microsoft, Google, Amazon, Meta, are scrambling for clean 24/7 baseload power, and nuclear is the only technology that delivers it at the scale they need. Microsoft signed a 20-year deal to restart 3 Mile Island. Constellation, Talen, and Vistra have all signed multi-billion-dollar power purchase agreements with cloud providers. NUKZ holds every one of those names. Performance has been strong. NUKZ has outpaced URNM and the broader S&P 500 over the past year, riding the AI power demand wave. The fund still trades like a thematic ETF, meaning higher volatility than utilities and lower volatility than pure uranium miners. So who is NUKZ actually for? Investors who believe AI data center electricity demand stays elevated for years. Investors who want full nuclear ecosystem exposure, not just uranium miners. And investors who think SMRs, small modular reactors, become a real industry by 2030 rather than a perpetual promise. If you only want uranium prices, URNM is cheaper and purer. If you want utilities, XLU exists. NUKZ's edge is being the only fund that captures the full nuclear renaissance in one ticker. A quick reminder: nuclear ETFs are sensitive to political shifts, accident risk, and energy policy changes. The story is strong today, but a single major event could change the narrative fast. Do your own research before committing capital. If this video helped you understand NUKZ, hit like and subscribe for more ETF breakdowns. And tell me in the comments, which side of the trade are you on: NUKZ for the full ecosystem or URNM for pure uranium upside?